Hi, welcome back to my channel. Have you already started a startup or are planning to start one? And are you using all the government benefits? Then this video is going to be helpful for you. Hi, I am CA Saaab and I am a practicing chartered accountant since 18 years and I am on a mission to share and spread ethical financial awareness to everyone. The main reason most startups fail isn't a bad business idea, it's cash flow problems. The government has designed some amazing tax benefits for us, but most founders don't even know they exist. In this video, I'll explain the basics of tax benefits available to a startup in the most simple way and also including 2026 updates, and I'll give you a different view, a different perspective on startups which nobody usually shares on social media. So, as this video is going to be very helpful, please do watch till the end. First step would be DPIIT recognition. First step for every startup should be DPIIT recognition. To access the benefits which government provides for startups, your business needs to be officially recognized as a startup. So keep this in mind. Who can register themselves as a startup with DPIIT is only private limited companies, LLPs, and recently cooperative societies have also been allowed. Registered partnership firms, all these are eligible to be recognized as a startup with DPIIT. As per the 2026 updates, regular startups have an age limit of up to 8 years. But if you are in deep tech or in AI or robotics, the age limit extends up to 20 years. Your annual turnover must not cross 200 crores, and for deep tech, it's 300 crores. Once you have the recognition from DPIIT, you get 80% rebate on patent filing fees and relaxation of prior turnover and experience with respect to any government contracts or tenders. The second step would be 80 IAC tax holiday. Every startup should try to get this. It's the most powerful benefit which under 80 IAC of the old Income Tax Act 1961. If your startup is eligible, then during its first 10 years of incorporation, you choose any 3 consecutive years where you get 100% deduction on eligible business profits. That means even if you are making profits, you don't pay a single rupee tax. You need not pay any tax. But for this, you need to get IMB approval. I'll explain exactly how to get that in the next video. Let's now move on to the third point of angel tax. The good news is in the latest budget, the angel tax has now been abolished. So, angel tax, which used to be a massive headache for startups which were getting funding, now the angel tax is being abolished. In simple in simple words, when you get funding at a higher valuation than the book value or at a surplus, the surplus used to be taxed earlier, naming it angel tax. But now, in latest 2026 budget, angel tax is officially abolished. As per the Finance Act, when you raise funding, you no longer have to pay tax on the premium received, regardless of whether you received the funding from a resident or a non-resident, that is from Indian investors or foreign investors. So the funding process has now become a lot simpler. Let's now look at the fourth viewpoint with respect to GST benefits. On the GST front, many founders are scared of compliance. In 2026, the government has simplified few of the processes and provisions. If the tax on your inputs is higher than the tax on your output, like it usually happens in case of hardware or food processing startups, you can now claim provisional refunds, which means your business gets cash flow immediately. And If your turnover is below 5 crore, now you can opt for the QRMP scheme, which means you can file returns on a quarterly basis instead of on a monthly basis. Now let's look at a different angle with respect to income tax, which is the 44AD clarity. You might have heard in a lot of social media or influencers might be telling you can declare your return on a presumptive basis if your turnover is below 1 crore or 2 crore. Now a question many people ask usually, does presumptive taxation under section 44AD apply to startups? Because we discussed earlier that technically most of the startups should be private limited companies and LLPs. Here's your clear answer. Section 44AD is not applicable for companies and LLPs. If not, it only applies if you are running the business as a sole proprietorship or maybe as an individual or a partnership. Since most startups are private limited companies, you will need to maintain proper books of accounts and get them audited as usual. So, all these benefits are just the basic entry points, but the real magic lies in the technical filters and timing of using these benefits. To summarize, we have discussed about DPIIT recognition, ATIAC, GST benefits, and 44AD angle. In the next video, let's discuss what documents you need for an ATIAC approval and is a patent compulsory and what's the best time to trigger the ATIAC tax benefit. If you like this content and if you are waiting for the next video, please do like, share and subscribe. Thank you.